28th of April 2023. Now, as we're heading into the end of this month today, it's going to be very interesting to see whether European equity markets can finish the month up on a high, because if they do so, the odds from a historical point of view look pretty good with regards to further upside being seen towards the end of this year. But let's not jump the gun, and let's see what happened overnight. And in the US, we had a very strong session, well, basically a strong session of about a percent point rise on the back of better than expected US first quarter earnings by the likes of Amazon, for example, taking US equity markets higher. And this led to the European session also opening slightly up earlier this morning, but we have seen prices come off again in European equity indices since then. And that was on the back of weaker than expected Eurozone GDP data, and especially in Germany, we saw GDP for the first quarter come in on a preliminary basis at 0%. So much weaker than the expected 0.2% rise we were forecast. And also, we had a downwardly revised fourth quarter GDP number for Germany come in at minus 0.4%. And that's much worse than the minus 0.2% we saw previously. So that has weighed on equity indices. And if we look at the daily financial bet of the FTSE 100, we can see that we have dropped so far to below the psychological 7,800 mark to 7,788 so far on this daily financial bet. And if that low were to be taken out, I wouldn't be surprised if we were to slide all the way back down again towards the late January lows between 7,724 and 7,708. So short term, there is some downside pressure on the FTSE 100. And unless we were to take out today's high, and actually also yesterday's high at 7,880, we will see the first weekly negative close on the FTSE 100 in the last 6 weeks. As you can see here, we had 5 consecutive weeks of higher closes since the banking crisis back in March, and now we are on track to have our first weekly down close. Having said all that, if we zoom out onto a monthly chart, we can see that on the monthly basis, we are still on track to have a positive month of April. And as I said, when we see this normally, especially in the US markets, from a historical perspective, we should see further upside in the coming month. Now, before moving on to the DAX 40, I'd like to also mention that on the economic calendar today, we have the Fed's preferred inflation measure, which is the PCE price index, which is expected to come out at 1:30 p.m. London time. And for the month of March, we expect it to rise to 4.5% year on year versus a previous month's reading of 5%. And we expect core PCE price data to come in 0.4% higher than the previous month compared to 0.3% in the month of March. And then at 2:45 p.m., we've got US Chicago PMI data out for April. And that index we expect to fall to 42.8%. And later on today, we also have big oil first quarter earnings out from the likes of Chevron and ExxonMobil. So we might see some more volatility today on the last day of this month of April. And it may become quite an interesting session for market players later today. And if we look at the DAX 40, as you can see here, this much weaker than expected reading with regards to the German GDP data, although it's preliminary German GDP data at the moment, with that reading of 0%, the DAX 40 slid very rapidly down to the previous lows seen this week at 15,694, and I believe even briefly dropped below that to 15,677. So far, we seem to be holding above that support area. But if we were to slide through the 15,677 low we saw earlier today on this daily financial bet, we would be heading back down again towards the early February high here at 15,656, but could, to be honest, slide quite a bit further and perhaps retest next week the 15,480 low seen in early April. So it may look as if we are starting to top out here, unless we were to take out today's intraday high at 15,913, in which case further upside is much more likely to be seen. So far we're sort of holding here, but we really need to see what earnings in the US will do later today, and also the PCE price index, and whether that will lead to equity markets actually coming off on the last day of the month and prevent us from having a positive weekly close here, for example, on the DAX 40, because as you can see here, just like with the chart I just showed you on the FTSE 100, we've had 5 consecutive weeks of higher weekly closes, and it looks as if, judging by the chart today, that we are likely to actually close for the first time in negative territory on the weekly basis on the DAX 40. Moving on to the Dow Jones Industrial Average, we can see here that we had a very nice rally of over 1% yesterday, take us all the way back up again towards this high seen earlier this week at 33,894 on this daily financial bed. And right now, in the overnight session, we are slightly coming off with these European weaker markets I have just alluded to. And we'll have to see whether we can hold here or not later on today, what US earnings will tell us, because right now, as you can see here, we would be closing more or less where we have opened the week, meaning that this is a doji being formed on the weekly chart. But you saw here on the weekly chart, the Dow had already a weekly negative close last week, whereas European markets still had a positive close. So we have to see whether that is the beginning of a sort of retracement and then perhaps a short-term downtrend again, or even that turning then into a medium-term downtrend, or whether it's just one of those small movements here in a sideways trading range, which may eventually lead us to higher prices, taking the Dow Jones Industrial Average back towards the 35,000 area. So quite interesting to look at what the closes will be today on Friday, the end of the week, the end of the month of April, with regards to all these equity indices. The euro dollar has been quite volatile as well this week, and we've had a lot of volatility in the US dollar in general. And on the daily financial bed of euro dollar, you can see here that we've traded in quite a volatile range around the 110 area-ish, basically, and are currently, though, weighing on this March to April uptrend line and are in the process of actually sliding through it. It currently comes in around the 110 area. And if we were to slide through the last reaction low, that is to say Tuesday's low at 109.65, then it looks pretty likely that we will be heading back down again towards the late March high at 109.29, and perhaps even lower and slide towards the mid-April low at 109.09. So that is quite a distinct possibility as long as we stay below these current April highs between 110.75 and 110.95, which incidentally were 12 and 13-month highs with regards to the euro-dollar cross. But what I would like to do now is actually look at the Japanese yen, because what has happened here is extremely interesting. We had earlier today the newly appointed governor of the Bank of Japan, Kazuo Ueda, basically announcing a review of the central bank's policy. He did stick to the ultra loose monetary policy the Bank of Japan has been following for the last few years, and kept short-term interest rates at minus 0.1%, and also the 10-year bond yield at around 0%. But he did modify the central bank's forward guidance by removing references to COVID-19, but also said that he vote to keep interest rates at current or lower levels. And that led to a very sharp fall in the price of the Japanese yen. And as you can see here, with regards to the British pound versus Japanese yen, we've seen a fast appreciation of the British pound versus the yen take us to levels last traded back in November of last year. And as you can see here, we've got this very sharp ascent, very quick, big candle here taking us towards the psychological 170 yen mark. And above there, the next technical resistance area is basically the October high from last year at 172 yen and 13 cents. And that's where we are heading towards at the moment. If there were to be a short-term retracement lower, you've got pretty good support at last week's and also this Tuesday's high. And this comes in around 167.97, 96, basically that's support. But as you can see here, the odds are far more likely for us to see further upside than any short-term retracement in this currency pair. And dollar yen is looking quite similar. As you can see here, we've been evolving in an upward channel for the last month or so, and are currently heading towards the upper point of that uptrend channel, the uptrend channel resistance line at 136 yen and 16 cents, above which we can spot here the red line, which is the 200-day simple moving average at 136.96. So that's the next upside target from a technical perspective. And above there, we also have the March high, which beckons around 137.91. So much further upside likely with regards to the dollar versus the yen, with the Japanese yen basically depreciating on these comments by the new governor of the Bank of Japan. The price of oil has come off quite significantly in the course of this week and is on track for its second, I believe, weekly lower close. If we have a look at Brent crude oil, for example, here you can see that not only did we close our March to April price gap, but we actually slid through the March to April uptrend line and fell all the way back again towards the low seen back in January of this year at $77.65 on this daily financial bet. So far yesterday, we slid to $77.36. And if I zoom out onto a weekly chart, what we can see here is, as I said, the second weekly close, which is negative. And yes, we did break out of this long-term downtrend channel, which has been drawn into this weekly chart since basically June of last year. But we never managed to break above this resistance area here, which came in just below the psychological $90 mark. And it looks as if, given the fast descent we've seen by about 6 to 7% over the last week or so in the price of oil, that further downside looks quite probable. And we could be heading back down again towards the December 2022 low at $75.31. And then below there, we have really important support between the March lows at $70 or so. And also you can see here the red line, the 200-week simple moving average, which comes in slightly higher at $70.58. So short-term, further downside remains likely with regards to the price of Brent crude oil. And this will be the case from a technical perspective as long as we stay below the last reaction high, that is to say, the high from this Tuesday at $82.88. And we've basically come off with regards to the price of crude oil because of increasing recessionary fears. And obviously a recession would have a negative impact with regards to demand for oil. Now, let's move forward and have a look at the price of gold. And gold has been range trading between $2,012 per troy ounce on the upside and $1,970 on the downside for the last couple of weeks. And even though we had some risk-off sentiment in the course of this week, especially towards the beginning of this week, the price of gold, as I said, was capped around $2,012. So it didn't really make any headway and head back up again towards its one-year high at $2,048 seen earlier this month, but instead just continued to trade sideways. So it'll be interesting to see which way we will break out of this sideways trading range, perhaps next week. And basically what I'm saying is if we were to rise above $2,012 on a daily chart closing basis, we would most likely head up again to this April high at $2,048. and a rise above there would then put the $2,070 high from last year into the $2,075 from the previous year back into focus, so basically the all-time highs. Whereas a fall through the $1,970 per troy ounce low seen last week would take us not only back down towards the February high, at 1,959, but probably all the way back down towards the late March low, towards $1,944 to $1,934. So it'll be interesting to see in which direction the breakout will occur. But if you have a period of long, volatile, but relatively less volatile trading and a sideways trading range taking shape, quite often that is being followed by a period of very high volatility and a sharp breakout either to the upside or the downside. Moving on to silver, we can see here that following the around 30% rise we've seen in the price of silver from the just below $20 mark low earlier in March of this year, we have now consolidated lower and are sort of trading around the psychological $25 mark and have tested the early February high at $24.63 and so far slid to $24.50. Now, if we were to slide through that level, we would probably be heading back into the middle of this December to February sideways trading range, which comes in around the $23.75 mark or so. So that is a distinct possibility, provided we remain below the last reaction high, that is to say a high which is higher than the previous day's high and the following day's high, and that is the high seen on Tuesday at $25.36. So as long as we remain below that level, it's likely that we'll see further sideways trading with a slight downward bias. Thank you very much for watching Charting the Markets with me, Axel Rudolph. Please feel free to follow me on Twitter. My Twitter handle is @AxelR_IG. Have a lovely weekend.